Thank you for watching. Today we're going to do a brief overview of the mortgage jumbo loan programs in the Boston area. Homebuyers that have questions, of course, can call us 7 days a week or visit jumbomortgagesource.com for more information. First, we want to start out by establishing what exactly is a jumbo loan in the Boston area. Of course, you have standard conforming conventional mortgages, and then anything that's beyond that would be classified as a jumbo loan. Really around Boston and Suffolk and Essex counties, for example, the conforming loan limits right now for basic standard conforming loans is $828,000. Um, this is subject to change year by year. It generally does at the end of the year. So again, home buyers want to refer to the website to make sure they get the most up-to-date information. Most of the other counties around in Massachusetts generally, like the rest of the country, most of the rest of the United States is limited to $726,200. Um, Again, this is for just a basic conventional or conforming loan. Higher loan limits are available. It does go up for buyers that are purchasing multi-unit properties, maybe a 2, 3, or 4 unit property. Those limits do increase, and that's something to recognize is that the limits that we listed there are just for a single 1 unit property, which is what most people are going to end up purchasing. Medium home values are currently in the Boston area sitting around $718,000. So it's easy to see that really doesn't take a whole lot extra to go over the medium home value before you're kind of in that category of a jumbo loan. There are financing jumbo loan limits that go up to 95% financing for qualified home buyers, which we'll look at a brief overview of some of the qualifying criteria in the next slides. But loan amounts generally vary. It's going to vary based on the down payment. For the 95% financing, 1.5, maybe a little bit higher for the loan amount depending on the location, and if you're in one of those high cost counties. 90% financing, generally $2 million, slightly above again for some of the high cost counties, and then those home buyers that are putting 15 or 20% down payment, they have even more expanded loan options for higher loan amounts. Again, though, the higher the down payment, of course, generally is the higher the loan limit. The 95% or the 5% down option, of course, is one of the most popular programs out there. And again, loan limits around 1.5 million, slightly higher for the high cost locations. Credit scores generally they want to see over a 680 credit score for the 95% financing. And again, credit score does not guarantee loan acceptance or approval, as there are other stipulations in place for any buyer that may even if they meet the credit score requirement, but they have recent financial hardships in the previous 2, 3 years, there may be additional requirements there for any home buyers that are in that situation. Documentation requirements, these are full income and asset documentation loans, 2 years of W-2s and or tax returns if you're just self-employed. Of course, asset statements, any assets need to be documented that are required to really show the funds for your down payment and closing cost and reserves. Property types include all your standard primary residence, single family homes, and most condominiums, investment properties, and second homes. Second homes are generally permitted with a little bit greater down payment of 10% down. Investment properties, those generally require at least 20% down. And of course, there is construction to permanent financing options with 10% down. You can refer back to the website again for more details on that. The transaction types include just all your regular purchases and rate and term refinance, and the terms include all the common adjustable rate options, fixed rate options, 30-year, 15-year fix, 5, 7, 10-year ARMs. All those are included, all the common options that are all fully amortized loans with principal and interest. There is no negative amortization type programs here. And most often combo loan structures are used. The benefit of this, of course, is that it eliminates the private mortgage insurance or the PMI. So a lot of times home buyers will do that combo loan, maybe a first mortgage up to the conforming loan limit or close to it, and then generally a smaller piggyback loan to cover. In this case, if you're putting down 5%, you would generally have a piggyback loan that would be 15%. So an 80, 15, 5, 80% first, 15 second, and then of course 5% for the down payment. So these combo loan structures, again, can be useful to eliminate the mortgage insurance and save a bunch each month. 10% down, again, loan amount slightly higher. Credit scores can be lower, especially for those home buyers that may be borrowing uh, less than 1.2 million. But again, the exact credit scores needed will depend on the requested loan amount. Documentation requirements, all the same. Complete income and asset documentation. We do want to add, though, for self-employed buyers, there are bank statement deposit programs. Again, this is for just home buyers that have 10% or more down payment and that are self-employed. And this allows these home buyers to qualify based on their actual business bank deposits, an average of that, instead of an average of their tax returns, which is a lot of times beneficial in order to document the qualifying income that's needed for debt to income ratio purposes. So that can be very beneficial, again, for self-employed home buyers that do have at least a 10% down payment. Property types are all the same. Again, include primary and townhomes and select condos. Um, again, investment properties will require 20%. Transaction types are all the same, but also it does include cash out refinances. So there are cash out refinance opportunities up to 90% loan to value. Again, all the common arms and fixed rate options and combo loan structures, again, to avoid the PMI for those that aren't putting 20% down, we can break it up. And in this case, do an 80-10-10 structure in order to um, avoid the PMI. Documentation and reserve requirements, again, fully documented loans unless you're doing the business bank statement deposit program. 2 years for the regular full documentation loans, 2 years of tax returns and W-2s, generally 3 months of liquid asset statements. Only assets that are needed, though, to show the down payment and closing costs and reserves. We don't go anything beyond what's needed to show. And then generally most recent retirement statements, quarterly retirement statement for maybe a 401k or an IRA account. And those can be used also when we're talking about mortgage payment reserves. That's basically the amount of the assets that a home buyer has left over after they pay their down payment and their closing costs. Most of these programs will require generally 3, maybe 6 months, slightly more to show for mortgage payment reserves. That's pretty common. And non-liquid retirement accounts, like a 401k or an IRA, that can satisfy the reserve requirements. So in order to satisfy reserve requirements, it doesn't need to be an actual liquid account like a savings account. It can be a retirement account for that. Again, other jumbo programs available. We talked about the bank statement deposit qualifying programs, vacation, second homes up to 90%, and then construction or permanent financing is up to 90% loan to value as well. That's a basic Recap, any home buyers that have questions, of course, call us 7 days a week and visit jumbomortgagesource.com for more information. Thank you for listening.